Hi, I'm Mark Anderson. I'm a mortgage banker with Paramount Bank. I'm licensed to lend in all 50 states, and I'd love the opportunity to earn your business. Whether you're looking for a purchase mortgage or a refinance, please do call or text me at the number below anytime. On today's segment of the 10-minute mortgage class, we're going to discuss one of the key 3 aspects of the mortgage application that drives the approval review. In the last video, I talked about the debt-to-income ratio, both what it is and how to calculate it. In a future, probably series of videos, I might need to break it into 2 or 3 just because the subject is pretty deep. We'll talk about credit. But for today, we're going to be talking about assets. Now, the first thing, how much money do you need to be approved for your mortgage? I'm going to walk you through the numbers on that. Next up, I'm going to talk about the acceptable sources of assets that can be listed on the mortgage application to support your approval. And then finally, I'm going to walk you through how we, behind the scenes, when we're reviewing your statements, what we're looking for. And I'm going to give you a couple tips to keep in mind. All right, in the how much section, the first thing that you start with in this pretty simple equation is your down payment. Now, depending on the type of loan that you're doing, you could be looking at a 20% down payment, 10%, 5%, 3.5%, 3%, 0% down on a VA transaction. Whatever that down payment is, that's the first step. That is the first amount that we need to add into this equation. Next up, we add in the closing costs. Now, the closing costs are going to be listed once you filed the application on the official loan estimate document. Now, before you make an official application, like if you're just getting pre-approved, your lender should, I'm going to emphasize should, they don't always, but they should be able to give you a full comprehensive estimate for all of the costs. And then next up, this does not apply to all mortgage transactions. I'll go out on a limb and say it actually doesn't apply to most, but in some programs, we are required to demonstrate and to show that you have assets not only for the down payment and the closing costs, but that you've got money left over in reserves. I'll give you a quick example. On a jumbo mortgage transaction, it's pretty typical to see the underwriting guidelines set at needing 6 months of mortgage payments left over in reserve after accounting for your down payment and closing costs. Now, conceptually, big picture wise, the reason I started with how much is that this is a binary question that the underwriter is going to have to answer based on the documentation that you submit. And the question is, how much? How much do we need? And do we have the documentation to show that we have the amount that's needed? So everything is based on that fundamental question. If we need $100,000 to satisfy the down payment, the closing costs, and any potential reserve requirement, we've got to be able to show on the application and in the supporting documentation that you have met that goal, that we have verified that you have those assets. Okay, acceptable sources of funds. First up, liquid bank accounts. Pretty self-explanatory, any checking, savings, money market type accounts. Next up, we've got your non-liquid accounts. This is brokerage accounts, if you own individual stocks, if you've got retirement, certificates of deposit. The one trick on non-liquid accounts is that due to the nature of these accounts, they are going to fluctuate in terms of their balances on a day-to-day basis. You check your 401k on a Monday and again on a Friday, and you could be looking at a very different picture. Because we can't rely on the statement balance, because it changes so much, on the mortgage, one of the things that you might have to do, like if you're using retirement funds for your down payment, or you're cashing out stocks, or pulling money from a brokerage account, we actually have to see the money come out, and then we need to document it going into one of your liquid bank accounts. Now, I'll be dead honest. Assets, in my opinion, are one of the most annoying parts of the mortgage process. It causes a lot of frustration. The guidelines are super, super nitpicky in terms of the need for us to be able to see all your money and to be able to verify where it came from, how much exactly you have. So that can cause some frustration. Next up, we've got other sources that are acceptable sources of funds for a mortgage. Gift funds. I'm going to need to do a whole video on the subject of gift funds because it gets a little bit complicated, but generally speaking, it's acceptable for you to get a gift from a family member to support your mortgage application. Next up, there are various down payment assistance programs out there. That's fine. And then this may come as a surprise, but believe it or not, the mortgage agencies are on board with crypto. So your cryptocurrency, whether it's Ethereum, Bitcoin, whatever you've got, the key thing to keep in mind when using money from your crypto wallet to support your mortgage application is that we're going to need to document, number one, that the money is your money. So I've seen some wallet interfaces that don't necessarily have something approaching a traditional bank statement, like with your name on it. We're going to need to see some sort of official statement to show that it's your crypto and not somebody else's. That can sometimes cause some challenges. The next stage is we actually have to document the money coming out of crypto, convert it over to US dollars, and put into one of your liquid bank accounts. So that can, it's best to approach crypto when you're using it on a mortgage transaction. Have a conversation with your loan officer in advance to sort that out. Okay, there are some unacceptable sources of funds. Mattress money, coffee can money, cash in a safe. This is unfortunately not an acceptable source of funds in a mortgage transaction. Now, the reason for this, it has a lot to do with the bad actors that ruin it for the rest of us. So you've got your money launderers, your criminal enterprises that use real estate transactions to hide money. You've got various angles that the federal government is on the lookout for. And so one of the things we have to do on the mortgage side is we have to verify all of the money being used in your transaction, and we need to document that it's your money, not from somebody else. Cash presents a problem because that very well could be somebody else's cash. Now, if you have some cash literally lying around your house or in a safe, and you want to use it for a mortgage transaction, it's very important. You're going to want to deposit that money into a liquid bank account at least 2 months before you apply. The reason for that, and I'm not trying to tell you to do anything that puts you in a gray area. It's well understood and accepted that cash can be used as long as it's seasoned, meaning that it's in your bank account for at least 2 months. Next up, another unacceptable source, as I mentioned, is really money coming from other people or money coming from places that we can't verify. If we can't properly document where the money came from and that it's yours, it cannot be used on a mortgage transaction. And then more broadly, anything that the underwriter can't explain or understand or document, anything without a paper trail, that can present problems. Now, one thing that I'll tell you about unacceptable sources in general is if you have enough assets documented in acceptable sources, you've got sufficient liquid bank balances, you've got a good brokerage balance that we've adequately documented the withdrawal from. If we've got, say, a $14,000 cash deposit that you made that we can't properly source or verify, what we can do on most transactions is do what's called backing out. So we take all of your balances on the acceptable sources, and we take that $14,000 or $15,000, whatever it is, and we just basically subtract it from our calculations. As long as you've got enough other money, you can still be approved, even though you've got that transaction that can't be properly sourced. All right, so when you submit your paperwork to us, what are we looking for? What are we looking at? First thing, we're going to be reviewing your most recent 2 months of history on your bank accounts. So we need statements for 2 months. If it's an account that provides quarterly statements, we'll take that quarterly statement and review it. Next up, we are going to need to see all pages. Now, after 17 years working in banking, I have never received a satisfactory explanation for why page 404 is left intentionally blank. I have no idea. It's one of the biggest mysteries in the world of banking. Even though that page is intentionally left blank, if it's page 404, we need to see all 4 of those pages. Next up, we need legible copies. Now, this is becoming less and less of a problem as people have shifted over to platforms that make it very easy to provide PDFs. I love PDFs. PDFs are the easiest to work with. It's the best resolution. It works great. If you're scanning stuff in on your scanner from 1995, if it's garbled, if it's crooked, if it's not truly legible, it's going to cause problems. There's a lot of people that are going to need to review in detail your asset statements, both during the process and maybe if an auditor picks up your file years down the road to audit the bank, we need to verify that everything there is legible. Next up, the first thing that I look at after verifying that we have our 2 months, that we have all pages, that they're legible copies, is I'm going to look at your history in detail. And no, I'm not judging you on your fast food purchases. I'm looking for large non-payroll deposits. Now, what is large? Large is typically, this is not always the case for every transaction, every program, but if the deposit exceeds 25% of your gross monthly income, then it is considered large. What we need to do in that case, as I referenced earlier, is we need to source that money and we need to document it. So there is almost certainly going to be paperwork involved if we have any of these large non-payroll deposits. Next up, The fundamental thing that the underwriter is going to do, as I suggested at the beginning of the video, is we're going to add up the total approved statement balances based on the most recent data that we have. And truly all we're doing is verifying we need $100,000 to qualify to cover the down payments, the closing costs, and any reserves. Do the statement balances reach $100,000 or more? And it's a yes or no question. So it's that simple. Next up, the last thing I'll talk about here has to do with timing. So I mentioned before that assets can sometimes be one of the most kind of annoying, irritating parts of the mortgage process. And it's especially true if people don't have all of their money lined up when they apply. So it's actually very common for people to put in a contract on a property, closing in 30 or 45 days, and they've got a plan. Well, I've got money coming in from selling a thing. I've got a gift from family, maybe. This can cause a problem if we're not able to adequately document and verify all of your assets before closing. It is unfortunately somewhat routine that there's some asset deposit coming that's maybe going to happen 2 days before the closing. If you're in that boat, some of those situations are unavoidable. I totally get it, and I want to help you through that as painlessly as possible. But the best thing that you can do for the asset side of the mortgage application is to have your money in place as quickly as possible. Because if we've got a documented deposit, source of funds, all that stuff, 2 days before the closing, that can cause some issues because your file is not fully clear to close as early as I would like it to be. And I don't want anybody ever waiting at a closing table for us to click the button on the final approval. So long story short, I just recommend best case scenario, have all of your assets lined up. If you've got to make withdrawals from non-liquid accounts, for brokerage accounts, do that up front. Don't wait on getting the optimal time in the market to sell your stock. Trust me, it's worth it just to have it ready to go, documented, so that your mortgage approval will be as smooth as possible. It's hard enough. So getting that in place as quickly as possible is very, very important. Well, I hope you got something out of this. I hope you learned something. If you have any questions for me, please do call or text me anytime. Please do like the video, subscribe to my channel. I'm going to be doing a lot more content here going forward, especially in these educational videos. Thank you very much for watching. Bye-bye.